Hello. What's going on, everybody? How's everybody doing? What's up, Oliver? You called it. How's everybody doing? All right, guys. Let's go ahead and look at this. Al is a scam. Savvy, calculated, analytic mastermind. What's going on? All right. Rest in peace. All right, yeah, actually, you know what? Before we start this live, I just want to let's just talk about this real quick. Actually, yeah. So if you guys haven't heard yet, the United Healthcare CEO was fatally shot. His name is not Andrew Whitty. This is not. Is this the? Did they just appoint a new one? I don't know about that guy, but this guy, unfortunately, was fatally shot. Very sad. He's not this guy. It's this gentleman here. He was fatally shot with a masked gunman that had a silencer, which is insane in New York. And my heart goes out. I just let's just take a second here. Imagine, you're with your family, and all of a sudden, it looks like a planned assassination. No, definitely not random. Imagine, you say bye to your family in Minnesota, you go to New York for an investor conference, and you hear back that you're most likely probably in the media before you even hear from the officers. And it's a very sad day. So my heart goes out to this gentleman and his family members. So this is very sad. Shot in the chest and the leg. And I think the depending on the leg or the chest looks like the fatal one, unless the leg hit some major artery. But yeah, very sad. Okay, guys. So yeah, that's definitely a very sad day for that. So in this video, we're going to go ahead and talk about a couple things. How you doing, Patrick? Probably a customer who got their claims denied. Yeah. I mean, that's what a lot of people were saying. Exactly. Or maybe like a parent whose child's claim was denied. I don't know. We're just speculating now. We'll get the details later. So a while back ago, 2 days ago, I went ahead and published a video saying that Clover Health was in the top 77 best stocks in the USA. Now, some of you guys definitely watched it. Great video. Well, I'm here to update you on the fact that now Clover Health has been upgraded to the top 74 best stocks. Even their worldly ranking has increased. Now, this ranking is derived from the fact that institutional investors are doubling down on Clover Health, right? So it just went from top 77 to top 74. And this is kind of the screenshot image. For reference purposes, I put Palantir's ranking, which is in the top 196 best stocks in the United States, top 643 best stocks in the world. Clover Health is top 74 best stocks in the United States country ranking, and the global ranking is the top 233. Here are basically the amount of institutional investors prior for Clover Health ownership, 156. And then now we have 198 institutional ownership. As you can see, basically the increased count is synonymous with Clover Health, where Clover is actually, with Palantir, where Clover is actually leading it. Palantir is $70, guys, and around $69, $70. And we call that out in $6.55. So good to see that the fund score is a lot higher for Clover Health. So with that respects, Clover Health is doing really good. Okay. So this ranking is actually extracted from Fintel. We do have some APIs associated with them. So this ranking is from Fintel. This is a institutional SEC 13F filing ranking that they have. So this is their own data. And I just wanted to share it with you guys because I think it's a great showcase to show that institutions are now doubling down on Clover. So in this video, we're going to go ahead and talk about this Wells Fargo video, which has a sad sentence to it. We'll go ahead and talk about it. We'll go ahead and talk about my notes that I took regarding the Clover Health 2024 Citi Global Healthcare Conference. I got 2 pages of notes for you guys that you're going to love. Pretty much, this is exactly what happened in the meeting. So it'll save you some time. I also am going to talk about some proof of data, right? So our Al Stock Trades platform truly empowers retail investors to win against Wall Street. I just wanted to kind of put down, this is just the skim bones of what we have. We have way more than this, but we have over 2.5 billion outputs of institutionally graded data for comprehensive market insights. We have an algorithmic flow tracker identifies where big money invests. We have a quant fund strategy analysis, real-time signals when large-scale dark pools invest occur, big money market flows. This is on par with Renaissance-type technology, which unfortunately is a closed Mendelian fund, which I'm sure over the course of the many years you've seen this play into effect. We have a market pulse, which tracks high net worth investment movements. We have our deep dive reports, which are high-level institutionally graded company analysis. We have the top-tier intrinsic value calculation, the most accurate in the stock market, we believe, and I believe it's the truth. And you guys can see the returns that we've identified. We have institutionally graded data, Bloomberg level analysis and outputs. But most importantly, we have network access. Engage with smart retail investors worth at least $55.3 million collectively within the platform. And that's with a 30% response rate. I think we have close to $75 to $100 million. But as of now, with a 30% response rate, we have 55.3 million. Okay. That's a 30% response rate. And this is only going to grow as Clover Health grows. So for folks that are interested, we do have a Black Friday coupon code. It will be expiring soon. So take advantage. I mean, I just wanted to kind of list all the things we have because, this is the real deal. Okay. So how do you think big institutional holders goes from 32 shares down to 17 now back to 9? Well, it's institutional investors has ebbs and flows, and an overall is a 3-month delay. The past 3 months, Clover Health has increased star rating by 4, has a HEDAS score that's industry leading, the best leading MCR, profitability, and positive free cash flow. So we're going to see a big increase, I think, in institutional investments. And in fact, you can see from year to date, we're up 253%. So definitely good stuff there. How you doing, Clover-minded Kevin? What's going on? What's going on? Thank you for joining the stock terminal side of our thing. So very excited. Okay. All right. So now that we talked about this, let's just quickly, before we go over the healthcare conference, let's just kind of, we're not going to play this whole video. Let's just I'm going to stop the share of the screen, and I'm just going to go ahead and I'm going to share with you guys the audio version of this. And I just wanted to just point this out. Okay. Let's see. I think it's clear Clover is strong enough to weather any recession in the next decade. Oh, I believe they have a roadmap for success. How long is Black Friday still going on? I had my credit frozen, having issues with a firm. I'm really sorry about that, Rick. You know what you could do? Go ahead and message me at al@alstocktrades.com. So that's al@alstocktrades.com. Or you can do support at alstocktrades.com. But you can go ahead and do, al@alstocktrades.com. So al@alstocktrades.com. Go ahead and send me, and then we'll go ahead and work things out. So we'll go ahead and do that. And so the Black Friday, I honestly, when it gets to like 3 days, or I don't know, I'll let you. I have to check. It's all like done with Linda, my assistant. So I have to double check to see kind of when she placed it as. But it should be right around when last year's Black Friday was. I can't stopped. I'll let you guys know. I have to look into it. But she hasn't told me anything, so I think it's still running now. But I'll take a look into it. It's it's extended because this is like Cyber Week. That's why we have that the deal still going. So instead of just changing it to Cyber, which is this Black Friday, it's the same discount, right? And this is the largest discount we have. So definitely take advantage, right? And it's one-time payment, right? Yeah, I know we talked about it early on. Definitely scary. I mean, what the hell was that about? I think it's because of maybe denial or something. I'm not too sure. Tough to watch though when you see everything blowing up. No, 100%. So this is a pretty good video, guys. We're gonna go ahead and play it. Let me just make sure the volume is up here. I'm gonna go ahead and play it for you. Let me just decrease the speed so we can watch it peacefully. And without further ado, let's get started.
Chris Harvey of Wells Fargo, right here at Post 9. Welcome back. Thank you.
Well, that's a big setup for you, man.
It's a big setup.
7,007, not 7,000 and not 7,005, 7,007.
Big James Bond fan. It's 7007, just so you know.
All right, 7007. Why'd you come up with that and how?
Well, we came up with that. The market multiple is 22. We saw 16% growth for next year and the year after that. That's matching what we expect the S&P to do next year. And so really, we're not talking about multiple expansion. We're talking about EPS growth and EPS growth going higher. You have a good economy, you have tight credit spreads, you have less regulation, fundamentals are improving, and the rich continue to get richer.
So this is all.
So pretty much that's all I wanted to basically, you can watch the rest of the video later, but that's pretty much what I wanted to say. So he pretty much, let's just kind of exit this. Let's open up the transcripts if they are available. Nope. Oh, what they are. Let's open up the transcripts real quick. And he said, good economy, tight credit spreads, fundamentals are improving, and the rich continue to get richer. And that's exactly kind of why I wanted to talk about this video, specifically the comment of the rich getting richer and sadly the poor getting poorer. This is what I was talking about the other day in regards to where I believe our economy is headed. Let me just go ahead and stop the share of the screen to share it normally so I can flip around. So it's unfortunate, guys, because, you know, the fundamentals are improving. And if you watch the video continuously, he goes ahead and talks about how next year you're going to see more M&A, mergers and acquisitions. You're also going to see the IPO market flooded. So you're going to start seeing IPOs and potentially SPACs come back online. And what that means is you're going to have an era of speculation. And if you look at the overall mean reversion model that our beloved JB always talks about, I think we're about to set a new. I think we're about to set up a new record straight. Because if you look at the AI bulls and bears model, we're actually a little bit more bearish now, indicating that it's not a crazy risk-on market, which shows that this rally still has legs. And another thing is, we haven't seen margin debt increase to a point where we are marketing a top. So potentially that it shows you that we can still go higher. Hence why these crazy targets of 7,007 in the new year is significant. A lot of other targets are in the $7,000 range, right? So with that, and this guy's the head of equity strategy, Mr. Chris Harvey. So with the increase in M&A exposure and IPO, this is going to basically reward markets that tend to have a high revenue growth and overall growth structure. Clover Health is part of this growth structure, as we're going to talk about the Citibank's Healthier Conference. They're going to basically increase the growth structure of things. So the stock is pretty much, I think, going to go up a lot, as well as others as well that we talk about on our stock terminal. But the biggest thing I want to talk about is the opportunity of a lifetime. These types of opportunities come every 20 to 25 years. The last time they had an opportunity like this was the dot-com bubble crash. We've also had opportunities like the recession in 2008, the great financial crisis, and also the 2020 COVID-19 induced recession with the lockdowns. So amongst other lockdowns, if we remove those variables, I think what's going to be happening is the equity markets, I think, are still going to experience recession types as people pull their money out. But I think they're going to be met with a quick check-bound rebound, meaning that opportunities to make money in the market is going to be quite limited. The reason why, if you go, let's say, to Tesla's AI bot, which is speculated to be around $30,000, I think the future of our society is going to be dominated by automation and robotics. And I think what's going to be happening is when we go into your grocery stores or your Jamba Juices or your McDonald's, your Chipotle's, there's going to be robots pretty much serving you. And I think it's going to get to a point where robots are actually going to be primary care providers. And who knows, they might even get to a point where they're able to do surgery. I mean, would you trust the robot with a 99% success rate over a human? I mean, honestly, I know this sounds crazy, but if we were to just, again, mathematically speaking, take the calculus version of this fourth industrial revolution, and for all my math nerds out there, and all, we actually had to have a professor. I'm not going to specify where, but he's a professor in physics, and he joined our platform. So we have a lot of smart people, and I'm very proud. So for my physics professor there, if we were to take the limit approaches infinity, right? So for folks that don't know what I'm talking about, the limit approaching infinity. Okay. It's a thing where we do in calculus. We take a math function and we say x approaches infinity. Okay. So if we were to take this innovation and if we say, let's run it through infinity, at what level, let's say, if we were to totally maximize these robots, what would society look like? Well, if we take the limit approaches infinity, we're going to have everything that we do as humans be done by robots. So then that leaves the problem. What about the work? So if it's true that now these robots are going to be trading equity markets, and we know Renaissance Mendelian fund type technologies are turning 50% year over year, their AI is outbeating the market. Imagine once we have that and everyone has that. I don't think they're going to be markets that are going to be able to be exploited. What I'm trying to basically tell you is I don't think that we're going to be able to have big recession types on the stock market because it's truly going to be a non-emotional market, because these robots are going to basically be trained to take advantage of any dip in the market because they're going to be running intrinsic value calculations on every stock. Okay. The problem now is, okay, we'll just get jobs and we'll work. Issue is these robots are going to be taking people's jobs. What I'm basically trying to tell you is there's going to be two classes in society, the rich and the poor. And like this gentleman said, Mr. Chris Harvey, we all recognize this of people that have spent decades on Wall Street. We see this, okay? There's going to come a time, and I think this may be the last revolution in which now the human can think, now the computer can think for itself, that we're going to get to a position where things are going to run so smoothly that we're going to have something called universal basic income, okay? But the problem is this UBI, universal basic income. It's going to be social welfare. And the issue is they're going to receive minimal payments. And these are just going to be basic payments. And they're going to just allow you to just live a normal life, not even normal, just allow you to eat and poop and have a roof over your head. And the issue is, in terms of enjoying the American dream, you know, again, robots need maintenance, or are their robots going to work on themselves? Humans are fucked. Exactly, right? Because what happens if you have a robot that's able to help other robots? So this is what I'm basically, I think in the next 50 years, less, I think we're going to see this. And the problem is there's going to be two sides. It's always two sides from Karl Marx, the haves and have-nots of society. And the sad part is people educated versus uneducated. I think the educated and uneducated are screwed. The only people that are going to survive this and people that are going to enjoy a prosperous life are the people that own assets, own real estate, own the next fourth industrial revolution. Folks that own the Palantirs of the world, the Clover Healths of the world, right? And own them in such a way where, you know, I'm going to just summarize this in a sentence. This is your last time to become rich, I think. I don't think there's going to be a time, once we see this world, I don't think there's going to be an opportunity for people to become wealthy anymore. And I think this is it. I think this is the quantum leap. I think this is it, like, to where, you know, if you are rich, you will stay rich. And if you are poor, you will stay poor. And this is what I saw many years ago when I saw Tesla drive itself in 2016. And I was like, this is not good, right? And this is why I created this platform. Because I believe that in the next 10 to 20 years, I think, yes, there might be opportunities for us to make money, but we're going to be battling these people. We're going to be battling these monkeys here, right? And unfortunately, we're going to lose the battle. I hate to tell you this, right? I'm on a paper. We're working with the chief scientific officer of Microsoft, right? This is like medical school related stuff. And unfortunately, what I'm seeing of how these things are scoring on the medical licensing examination, this is not good, right? And again, mathematically, the argument can say, well, these are just tests. AI can't really do what physicians can do. The thing is, we can break your brain down mathematically, and so can these machines. And if you take the limit approaches infinity, we will get to a position where we will get to a robot that can function better than a human being. And unfortunately, even this platform, our Al stock trades platform, will become useless in the next 50 years, right? Because if the markets totally function efficiently, then there will be no drops in the market because they will all be run by machines. And they already are, right? So this. I hate to say this, and again, I'm not trying to manipulate you guys and say, oh, you need to buy my product now. All I'm just telling you is that this AI revolution is happening. It already happened. It's starting right now, and your time is limited. Okay, and how I know that is because just look at NVIDIA. Look at NVIDIA. NVIDIA is a 3.5. It's up 3% right now, 3.7. It's up $3.56 trillion. 3.56 trillion. I mean, this is it. It's happening. This AI revolution is happening. And the unfortunate part is, are you going to be on the side of the owners of these robots and these AI technology companies, or are you going to be essentially the recipient of universal basic income? And then once you are the owners of these AI companies, there's ways to essentially create passive income, right? With the wheel strategy. And then you take that wheel strategy and then you buy properties. And again, I'm not trying to say, oh, buy my platform or you're going to be poor. You could do this on your own. It's just, you want to have network access. You want to have access to people that have over $55.3 million. And you want to be in that mind of people that are consistently looking through all these data sets to finding the next 10 to 20 to 100 baggers. If not even more, right? 300 baggers, right? That's my spiel of why I think this is probably the best investment you can make in your life. Speaking from someone who went from zero of homelessness to where I am now. I'm not trying to cap anyone. This is reality. All right, so let's go ahead and sadly, no one's talking about this. No one's slamming the table. Just like how I told you about small caps exploding before even Tom Lee talked about small caps exploding. I'm telling you guys this right now. The future is going to be separated between the rich and the poor, and that there is no middle class. It's going to be gone. Okay, you're going to get universal basic income, and this is a sad reality. Okay, so Demel, I'm going to need more time to be rich. That's what I'm saying. And time is running out. We won't lose if we go Will Smith iRobot on these clankers. I don't even know what clankers means, but sounds funny. Will Smith, I know it really is scary. I hope you understand the logic that I'm talking to you guys about, right? You guys, it's all here. Universal basic income. People have talked about it. I mean, people have talked about this. Even Elon Musk, who's leading the AI revolution, is talking about this. Okay. Elon Musk has mentioned this. He agrees with this, right? Elon Musk predicts universal basic income will take off once AI replaces workers. I'm telling you guys this. I'm not trying to cap over you guys. Okay. So instead of waiting, being replaced, get our platform so you can essentially look through all these stocks and we can basically get from zero to hero, and so our platform is only going to get more expensive. And the sad part is, in the next 20 to 30 years, I don't think our platform is going to be useful, because if it's true that AI is going to be taking over jobs, they're also going to be taking over people's investment portfolios, right? And we might be able to make money off of retail investors that still try to invest in the market on their own. We'll have those opportunities in recessions, but I think these recessions are going to be bought quickly. So the opportunities are going to be, instead of having a recession that lasts for 356 days in the stock market, right? You're going to unfortunately have recessions and they'll drop in one day and they'll be bought out. So that's the unfortunate, right? Right? That's what it is. Oh, I have no idea. Clover Health is testing retail's patients. Well, that's for sure. I'll have too much to get universal income, but not enough to be rich. I'll be behind on that. Well, oh God. Oh, woo! Wasn't expecting that. All right. So Clover Health 2024 Citi Global Healthcare Conference. So Peter led this one. Andrew was not there. For folks that don't know, Andrew is the CEO of Clover Health. Okay, just make sure everyone is on the same page. Peter is the CFO of the big one, right? The whole company. These are things that he said. I took my notes, and I think this is a great 2-page summary. So the first thing he said, we're positive free cash flow positive, demonstrates solid financial health, industry leading MCR, improved significantly with 100% in 2021 to lows 80%, reaching the upper 70s. This was not talked about by Peter. The analyst from Citibank talked about this. They have their finger on the pulse now. They're taking Clover Health very seriously. They realized that Clover Health's MCR was 100%. But when it dropped to 90%, they didn't believe them. But now that it's in the upper 70s, they're like, oh my God, you're a real AI company, right? Nation leading HEDI score, HEDIS, positions them competitively in quality metrics. You have top line growth, projected 10% growth, with a net income increasing to 32%, supporting intrinsic value calculation. So if we were to do an intrinsic value calculation on the net income growth percentage of 32%, we can have a different type of number. So we can actually go ahead and actually do this now. So if we go ahead, open up our intrinsic value calculation and just kind of basically put it here, we open up light mode real quick. Okay. And we put in the 32% because it's net income growth, which he talked about, which is right here. That's why we use technically net income on profitable companies, not revenue. Only reason why we've been using revenue is because of they were unprofitable. You do 10. Right now they're at, remind me, 25 plus 44 plus 49, 118 million of free cash flow. We're at 501 million. So this is the value, and this is what they need. This is honestly the value. This is what they think the value of Clover Health is, which is why their compensation, literally in the realm of $320 to $400 million, has to satisfy the $25 price. So I think this next year we will get to $6 and potentially to that 12. So I think this is the value of Clover without SaaS, right? I don't know what SaaS is going to bring. I think SaaS is going to be a 3 to 5 plus year project, but overall this is the value, I think, right? And that's pretty damn impressive, right? We're going to be really, really wealthy. Okay. Again, not financial advice. This is just an educational platform. Okay. That helped me change my life, right? And others as well. Okay. So profitability proven. Clover has achieved profitability on a 3.5 star. By the way, this is like, my notes, right? So 3.5 star basis, with expectations for further improvement as ratings rise, which they have to 4 stars. So they've actually proven that they can be profitable on a 3.5 star. They did this year. Self-funding growth. The company anticipates funding growth internally in the coming years, but I think we're going to get to a point where we're going to get to $25 stock price, and they're going to say, hey, listen, we think that we can grow further, but we need to dilute you guys so we can essentially grow at 40, 50, 60%. And I think when we're at $25 stock price or whatever, we're going to be like, yes, do it. I want to get to an $80 stock price. And I think that's when we're going to take advantage of this intrinsic value. We're going to be able to know exactly when to sell or when to do our covered calls, right? Star rating impact, at least for me, again, not financial advice. So star rating impacts, 4-star plan in 2026 allows for advertisement of ratings in 2025. So it's actually, they're able to advertise their 4-star rating, which is going to be boosting their membership growth. They're enhancing their benefits. Higher star ratings enable Clover to offer more competitive and rich benefits. And independent growth strategies. So growth strategies are executed without shareholder dilution for the next couple of years. Market presence. So geographically speaking, their core market is New Jersey with a 10% market share. Then they have South Carolina, Georgia, and Texas. The third-party expansion, expanding technology, the third-party Medicare Advantage plans and risk-bearing providers across 46 other states. For the third party, there's 2 components to it: SaaS revenue per member per month, cloud-based and shared savings. Again, I'm saving you guys time, right? This is, I'm breaking it down the most important aspects of what was discussed. They're predicted to reduce the MCR by over 1,000 basis points within the few years. Proof of concept is working, beginning in Iowa. Peter did not mention Iowa. It was the analyst that mentioned Iowa. Again, what I'm basically trying to tell you is these analysts now are taking Clover Health seriously because they understand they have quant-like technologies that allow them to basically see that Clover Health now is in the top 74 best stocks in the nation. and at the top 230 best in the world. So they understand, and so the response Peter said is that we're not starting from zero in Iowa. So they already know it's going to work, and this is going to basically prove that the platform even works even more. And that's going to cause even more members to basically sign up with their growth strategy for the counterpart assistant. And it's just going to be a flywheel business model. The only issue is it takes approximately 12 months for everything to come together. Now let's go ahead and work on the second page. So for the Clover Assistant, it targets healthcare outcomes and cost reductions. So the big thing is this is not it doesn't really seem state of the art, right? State of the art for me is like freaking, be able to take a freaking hair sample and diagnose you. It's not there, right? It's not that. Okay. I have an imagination. This thing is geared to wrap around CMS guidelines, and it leverages AI to guide physicians using CMS guidelines, significantly lowering costs and improving patient care. So essentially, it's able to follow these guidelines to reduce costs. So providers make more money, and overall insurance companies are able to decrease costs on the overall expenditure on healthcare, which is supposed to bankrupt the United States, if not fixed. Peter talks about strong intellectual property, that they protect their innovative technologies. There's data integration. It connects 100 data sources between pharma labs, systems, and claims to provide actionable insights. It's user-friendly. He always references it says an Apple-like interface enhances usability with its UI. Broker and membership trends. So there's plan switches driving growth. So there's a shift from relying on people aging into Medicare to capturing market share through plan switchers. They call them the switchers. So historically, Clover Health gets their people aging. Approximately 10,000 Americans are turning 65 every day. But now, since there's their disruption, there's switchers. People are basically have lost their insurance. So now they have to go to Clover because that's the best one that offers benefits. But also we have broker commissions. So maintaining broker commissions while competitors discontinue increase their attractiveness to brokers, which then allows brokers to help renew people into Clover Health because they're going to make money off of it. Another thing is what's going to end up happening is in January, we're going to get another bump of increased membership growth because a lot of beneficiaries that are using the bad insurance company, they're going to be like, wait, why are my premiums higher? Why is my deposit I have to pay higher? Then they're going to say, I'm going to switch to Clover because that's the best one. Or, for example, they're going to go and they're going to be like, oh my God, my insurance is not taken here anymore. Why? Oh, because it's not offered. Then they're going to end up looking at the best one in New Jersey and they're going to say, oh, it's Clover. So the competitive landscape, competitors are reducing benefits. Clover Health capitalizes on other plans, pulling out of counties or cutting benefits. Clover Health is there to recoup those switchers. Incumbent and new administration. The analyst questions if the new administration will favor traditional medical providers, Humana, United Healthcare. And we talked about this. We believe they are. Clover, Peter views that the administration supports Medicare Advantage plans as a positive. However, my argument is only time will tell. Okay? Long-term vision. There's a flywheel model here, guys. Growth is expected to accelerate in 2024 to 2026, specifically from 2025 to 2026 and beyond. SaaS business timeline, full contracts and implementation takes 12 plus months with significant results expected in 3+ years. Honestly, that's what I'm expecting, right? Future capital strategies. Clover anticipates a point where raising capital will enable market domination. They did not say this. I think it's going to happen. I think in the next 2 to 3 years, they're not going to raise capital, but we're going to get to a point where the price or Clover is going to be $15, $20, $25. And they're going to say, in order for us to grow, we need to raise additional capital so we can basically expand in these markets. And we're going to be like, it's okay, do it, because you guys can obviously, your business model works. Or they can just get debt, depending on what's going to happen. Analyst sentiment. Analysts now take Clover Health seriously, particularly after the Iowa contract and improvements in MCR and the star ratings. Institutional interest is increasing, driven by the company's proven business model and financial performance. Ladies and gentlemen, this is what I have right now, okay? Again, what I like to basically say is for all people that are on the sidelines, I don't know what you're waiting for. You get access to 2.5 billion outputs of institutionally weighted data. You have algorithmic flow trackers by itself cost $100 a month. You get it for lifetime access, one-time payment. This tells you exactly where big money is buying. You have a quant fund strategy analysis that real time gives you a signal when you got large institutional investors buying a stock. You get to hear about it first. Market pulses. It tracks high net worth investments, price targets from high worth analysts. automatic intrinsic value calculations, deep dive reports with high institutionally graded data company analysis, top tier intrinsic value calculation, best in the market, better than Bloomberg. Institutionally graded data from at a Bloomberg level analysis, and access to a 30% response rate of people that have over $55.3 million collectively. This is a platform like you have never seen that does not exist in the market. This is a very complex platform. I don't think there's another place that has what we have here, right? And I don't know why. Like, I think there is a place, but it's tied to the rich. And it's not a platform where you can buy. It's a platform where Mr. Beast talks to that guy who used to sell baseball cards and wine. That guy starts with a V. He's a billionaire. It's those people that basically come together and talk about where the next money cycle is going to be. But unfortunately, you can't buy access to that. Don't worry, we have our own platform. You are who you hang out with. You hang out with 3 losers, you will become the 4th. You hang out with 3 winners, you will become the 3rd. You become the 4th winner. Take advantage of our Black Friday sale. That's all I have for you guys. And again, it's the platform speaks for itself, right? So let's see here. Yep, that's all I have for you guys. It's a privilege and honor, and I will see you on the next one.